Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 31st of October, and we finished the month with some really nice gains here. Semiconductors for the month were up 11%, biotechs 12.5%, NASDAQ close to 5%. So we're getting stretched, and as I mentioned on Twitter today, it feels like the market's getting a little bit tired, but tired doesn't mean it needs to go down. It could mean that it just needs to digest the gains sideways, which is a healthy way to do it. When we look at this look here on TradingView, which is this is the 5-day moving average, that orange line. And when we're above it and we're making higher highs and higher lows, then the market is, it's shaded green. And you can see we went to yellow. That's because we're below the 5-day moving average, and the 5-day moving average is rising. If we were below a declining 5-day moving average, it would give us a much more cautious stance. Right now, it's just a little bit of a warning sign that we're stuck below the 5-day moving average. We've had a nice run, and perhaps we're going to pull back a little bit. Same is true for the NASDAQ and the semiconductors, and the Russell 2000 has been the laggard pretty much for the last several months since the Federal Reserve started cutting interest rates, which is, I think, a lot of people find ironic. Anyways, let's take a look at this S&P 500. You can see here we closed pretty much right at the anchored volume weighted, or we came right up to the anchored volume weighted average price for the week here, and then backed off of it late in the session. That's been a little bit of supply here the last couple of days. Not necessarily a negative thing, but just, again, more cautionary, because the primary focus is on the daily time frame, where we still have a very healthy pattern of higher highs and higher lows. This is our most important near-term level, that if we pull back, this is the level we want to see hold next week. That is the prior band of resistance, as well as that rising 20-day moving average. So 672-ish seems to be the important level that is likely to be held. You have to give the benefit of the doubt to the buyers, because we are in a primary uptrend. That's just the way it goes. The other thing is, keep in mind that if we pull back down there, that's approximately where we'll see this month's anchor. So, of course, Monday is a new month, and we'll put on a new anchor to monitor for the month of November as well. The NASDAQ still in a primary uptrend here on the daily time frame. Nothing has changed. Intermediate term trend also in an uptrend. And the bigger level here, you can see we're pretty stretched away from this prior breakout here at let's call it 612, and that's where we have the 20-day moving average as well. If we were to pull back down into there, it wouldn't be unhealthy for this market. It would be just a pullback, and that's where we would expect to find buyers if we pull back down towards there. Now, again, there's nothing suggesting that that's going to happen, but just in the very short term, we have this little pattern of lower highs and lower lows. So are we going to just consolidate and continue to rip higher? That's what's been happening lately. So, and the path of least resistance on the daily time frame continues to be higher. That's what seems most likely. We are still in the middle of earnings season. This week we had some big names. AMD was up strong. Amazon, we had a huge move. Let's move that out of the way, but huge move on Amazon with that gap up. Google also big mover, big winner on earnings, as was not NVIDIA earnings, but based on their conference that they had. Some of the losers. So we're seeing the market going a little bit both ways. Microsoft reported earnings, and this one's kind of just getting a little bit sloppy up here, is what I would say. We keep seeing these rallies that are failing and failing more quickly. So I think Microsoft is probably a little bit more neutral than anything. Meta, this one is probably taking a lot of people by surprise in the fact that it didn't hold the anchor from the April low. That's that green line. It didn't hold the 200-day moving average, and it didn't hold the year-to-date anchor. So people who are buying the dip in here are clearly early, and we are seeing that it doesn't pay to buy the dip. Wait for strength after. What does that mean? People ask me that all the time. What would strength after the dip mean in a stock like Meta? Well, one, we don't want to buy it with a declining 5-day moving average, and not for a swing trade at least. So let's say we even see a big day on Monday. That's great. That's part of the process of what we need to see, is something more along the lines of this. And once that 5-day moving average starts to flatten out, then we can look to be a buyer on strength. So, Meta is just one stock. It's going to need some time to heal. We also saw, stock like, it's maybe not as important, clearly not as important, but eBay got hit hard. CMG, which is already in a longer-term downtrend, hit hard on earnings. So it's going to continue to go both ways based on individual stocks and their earnings. And next week we have a lot of big ones as well. Monday after the close, we've got Palantir, Hims and Hers. We've got Tuesday morning, Uber, Shopify. In the afternoon, we've got AMD. We've got Robinhood next week. IONC, which is one of these quantum names, will probably say how much they're losing, as will D-Wave the next day. Just a lot of earnings still to be aware of. Now, this past week was the heaviest flow of earnings reports, but we continue to expect to see large volatility in individual names. And the Russell 2000, as I mentioned, this market is supposed to be the one that benefits most from the interest rates cuts, and a lot of that has been factored in. And the reason they probably sold off this week is the Fed basically took the December cut off the table, and the market didn't like that as far as the prospects for these stocks. But it didn't do anything to harm the longer-term uptrend. The longer-term uptrend is still intact in the Russell 2000. I'm hoping that we can see a pullback down towards that 50-day moving average. That's that dashed blue line, which is also the anchor off of this low, which I would argue is more important than the 50-day moving average, simply because we've seen this as a level where the buyers have emerged several times in the past. The 50-day moving average wasn't touched till way back here. This has been much more important in the last 50 days. That is the anchor off of that low. So for now, the Russell 2000, it's just going to need a little bit of time to digest and rebuild before it's ready to continue to move higher. And that's not necessarily a bad thing. We're not seeing a deep price pullback. We're just kind of treading water here for the last couple of weeks with a slight upward bias to it. Semiconductors have been the rock stars of this market, and they continue to be. This group, as we know, a couple of weeks ago came down and touched that 20-day moving average again. And here we are now extended once again. This market is always seemingly extended and up too much and all the things that people say before they short a stock and lose money. But we're seeing just a little bit of cautionary here. That's all. The 5-day moving average on Monday will be getting rid of this data. So if the stock just goes sideways, that 5-day moving average will continue to rise. It won't be till Tuesday that if we get trapped below it on Monday, then maybe we see, excuse me, a little bit deeper pullback. And then that might open the way for a test of the 350 level where we have prior resistance in that 20-day moving average. I'm not bearish here. Don't misunderstand what I'm saying. I'm simply saying we're extended, so take your foot off the gas. Don't be chasing names and making sloppy mistakes, but instead to be aware of what the potential for risk is. Let's talk about crypto for a moment. Ethereum, I thought this week I thought we were going to get hit down in towards this level. I was very clear on Twitter that I'm not bearish. I'm not looking to short this market, but instead I have bids down in here. It doesn't look like that's going to happen. We had an undercut of this low right here, rallied back up. Today they tried to break it down. It didn't go. So I'm kind of back to more neutral on Ethereum. I still want to see it pull back down here. I have a small long position, but I want to buy a lot more, and I think that would be the place to do it. It seems like that's not going to happen for a little while. What we can actually do is put an anchor off of this low as well and start to monitor how it behaves around that. Why isn't my anchor working? Here we go. So, that we can kind of monitor, and you can see that today's pullback came right to the anchor off that low, and the buyers were waiting for that. That's why I'm not thinking that it's highly likely we pull back. But it doesn't make me bullish in here as well, because we're just kind of in this range for Ethereum. So Bitcoin, kind of the same thing. We're still hanging around that 200-day moving average and the anchor off of the April low right in here. So, again, more neutral than anything. Solana, it came down to that 200-day moving average once again and was purchased. I didn't buy it this time. I had purchased it the last couple of pullbacks to that level, but I thought, maybe it's not going to do it this time, because the more times any level of support is tested, the more likely it is to fail. But so going into next week, week. On the cryptos, I think it's just a little bit more neutral, needs to do some consolidating and rebuilding. Biotech stocks are very strong. This is the more important level for next week. We want to see hold around that 110 level, basically. As long as they hold above that, they remain innocent until proven guilty above a rising 20, 50, and 200-day moving average. The financial stocks, these guys are having a little bit of trouble in here. You can see that they rallied up to the 50-day moving average this week and backed away from there. Then we saw, after that sell-off, we saw a rally up to the 20-day moving average and sold off. We're below a declining 5-day moving average. Maybe these guys are just going to continue to do nothing, and this is the key level in here. I'd love to see it pull back down to this area. That would just kind of be able to give us a test of the anchor from the April low and the 200-day moving average. It's a level of interest. It's not a place to do business, but that seems a likely area that the buyers might emerge and defend this, and it could start to rebuild possibly for the next upward momentum campaign, but it's not there yet. Let's talk about bonds, because I got out of my bond position on this day right here. Is it breaking down late afternoon on the day before the Fed, or the day of the Fed? What day was that? That was on Wednesday. So, anyways, look at the way that this market moves based around the Fed. This was the day the Fed cut rates the first time. This was the day the Fed cuts rate the second time. So when we look at that in terms of real interest rates, the yield on the 10-year, here's what we have. We have that was the first interest rate cut. And what happened when interest rates were cut? We saw that the market, it was right here actually, and then right in here. And now that's the inverse of course of what we're seeing here is that yields are starting to rise slightly because the bonds are down. So I think the best bet for the bonds right now is maybe they settle in down towards that 50-day moving average. I don't have a position. It's not my normal type of trade anyways. Neither is gold, and I'm not involved in gold, but here's what I'd really like to see happen in gold. Let me just clean this up because I've been talking about this one a little bit. And, here's the anchor off the August low. I had previously, let's just put that back there. We'll color it gold because I think that's where it's likely to find buyers if we see some further pullback for a couple of reasons. One, it's the anchor off of that low. So that's that gold anchor right there. Two, it's got this rising 50-day moving average in there. That's that blue line. And then three, this is also a 50% retracement of this low to this high. So those three technical factors come together and tell me that if we pull back down there, that's likely to be defended. What do we see now? We see this market rallying, maybe a bear flag, I don't know, on lighter volume. We've got a declining 5-day moving average. If I was looking to be a more aggressive buyer of gold, this is the zone I would be looking at. Down near about 351, 350, somewhere in that zone. The longer term trend is clearly still intact here. It's gotten ahead of itself, it's easy to say, and maybe it needs some further pullback. I think it would be healthy for it to pull back down towards that 351 level. So if looking to be a more aggressive buyer, that's the place to start looking more carefully in terms of gold. What else did I want to talk about here? I remember I was supposed to talk about the Alpha Trend sale. I'm not much of a salesman apparently because I waited till the end here. And if you've made it this far, thanks for listening to the end. Alphatrends.net, I have a subscription service that I don't talk about a lot. I'm not one of those obnoxious salespeople, but we're running a deal on it right now. It's $1,000 for the year versus $1,499 for the year. And what you get is not just the normal, regular Alpha Trend subscription, but you also get the advanced class, which is 13 hours of recorded material. You get access to a one-on-one call with me for 30 minutes. That's part of that $9.99. I do webinars every other week for subscribers where you get your answers to your questions. And also it's got a Discord access where I'm involved and answer questions in there as well. So check the link below and that will tell you how to get involved. Thanks for listening, and I hope you had a good week.